Hi everyone, my name is Bryan. Welcome to my channel. I'll be sharing today on how to spot what is a safe property to buy in, and more importantly, buying into safety, buying into protection, and buying into that gap that allows you to potentially make money from your property. If you like my content, feel free to follow, share, and subscribe to my channel. And my contact number will be 91999966. So if you have anything that related to real estate that you want to contact me for, please feel free to reach out to me. Alright, so in 2026, I think it's a very interesting year with many developments that is slated to launch in 2026. I think there are many upcoming launches that are very interesting to look at. But again, before we deep dive into any one of these projects, it's always about how can we determine what is a safe purchase price? How can we determine that today our entry is very well protected? Alright, with so many launches in the market and with so many differing price tags, how do we know that today the property that we are going to buy is something that can potentially protect us in terms of profits, or rather not profits, in terms of capital appreciation in the future, and in terms of that exit strategy in the future? So there will be a few things that I'll be looking into today. So feel free to run through all this with me. And again, with so many launches this year at differing price tag, at differing land costs, what is a good project for you to look at? I think ideally is to understand the fundamentals of how we actually pick out what kind of properties to look out for in terms of my entry price, in terms of my future exit. So what are the things that I will consider when I choose properties for my clients? So these are some of those things that I look at, and these are some of these things that you can look at as well when it comes to purchasing your property. So I'll be using one example to actually illustrate to you how we actually pick out this property. So from what we are seeing right now, I'm going to use a property that is already in the market right now. The project will be called ELta. So ELta is a development. Let me just go to the development itself. So ELta is a development tenure from 2024, and they launched last year in 2025. Now, the TOP is stated for 2028, and of course, this development is by CSC Land and MCL previously. Alright, so at the end of the day, when we look into ELta, this is a District 5 property, which is an OCR property. Now, the interesting thing is, last year when they were selling, they did very well during the launch day, but they do have balance unit in today's market. And why are we looking at the balance unit? Is to then further understand how can we still choose units within this development to enter. So the first thing that I will look at is the current pricing. So when I talk about current pricing, I talk about the launches and of course within the development itself. So within the development itself, if you notice what's on my screen, my lowest sale transacted in terms of per square foot is a $2,200 per square foot. My average is $2,555 per square foot, and of course my highest being $2,881 per square foot. So when you look at it from this point of view, right, at what per square foot do you want to buy in at? Do you want to buy in towards $2,555 per square foot all the way up to $2,881 per square foot? Do you deem that as a safe entry? Or will you want to buy on average at about $2,555 per square foot to as low as $2,200 per square foot? Which position do you want to take when you're entering into ELta? So that's the first question that we need to ask ourselves. As we can see on screen, what has been transacted has been very interesting. The 4-bedroom transaction at 1,300 square feet, they are doing about $2,300, $2,400 per square foot. And to me, this $2,300, $2,400 per square foot is deemed as a safe entry price. Why? Because if you look at a 3-bedroom that is done, this is done at $2,847 per square foot. And we have another 4-bedroom doing at about $2,644 per square foot. So when I'm looking at this kind of price tag with a $300 to $200 to $300 price gap within my development itself, this is then considered as safe. So when you want to enter into a development at this kind of price tag, you already have a buffer of $200 to $300 to even a $500 buffer if you are looking at the highest range of PSF. And this allows you to then capture that protection and buy into that gap within the development. Now, the next thing that we want to consider is actually the resaleability in the region. So the demand in the region definitely is high. The one that just TOP recently, this is actually Cleon. So for those of you who do not know where geographically ELta is, right? So on my screen, you can see this is ELta. ELta is located in Clementes. In terms of walking distance to the MRT, it takes about a good 12 to 15 minutes walk to the MRT itself. So if you look at ELta and you look at the surrounding developments, you see that there is Cleon and there is Clement Canopy. And of course, if we were to go further up towards where the Clementes region is, there is another development called Park Clementes that also recently just TOP in the last 3 to 4 years. So when we look at this resale climate, right, the newer resale climate, this is our consideration for our price peg. So our foundation price peg will then be pegged to all these developments, and we want to identify what is that gap between these developments. So again, if I were to look into Cleon for that matter, so in terms of comparing ELta to Cleon, and if I look into Cleon itself, you'll notice Cleon, their TOP is actually 2024. So they are about a year odd in terms of age. And in terms of the sale price, you will notice that today the per square foot that they are transacting at is already hitting $2,200 to $2,300 per square foot. So if you look at the highest line on top, you'll notice that today they are transacting on average 2,055, highest per square foot 2,327 per square foot. So you will notice that today my last transacted 2-bedroom, 3-bedroom, they are already hitting 2,003. And the very interesting thing here is that today, if you notice the bulk of the transaction, any units that is higher than the 2-bedroom, all right, usually transacts higher in this region. So this means that what? This means that today the 3, 4, 5-bedroom has more demand but very limited supply, which means that today they are able to command for a higher per square foot. So that's where you see that today a 3-bedroom going for about 2,327, a 5-bedroom going for 2,284, and the most recently transacted 2-bedroom going for $2,000 per square foot. So there's a disparity in that. Of course, as a 2-bedroom, you can sell at $2,200 per square foot as well. But I want to draw your attention to this. As a resale unit versus ELta, a new launch. Today, if I buy into ELta at $2,400, $2,500 per square foot, the gap between my resale unit versus my new launch is only about $200 per square foot. And that sets that foundation price for the new launches in that area. And this is something that I deem as safe as well, with a very low gap, a very small gap between the resale and the new launch itself. And we can even look at Park Clementes that is slightly further away from where it is. So if you notice for Park Clementes, we can see that the average transacted per square foot is already 2,102 per square foot, and the highest transacted being 2,618 per square foot. And the age of Park Clementes, right, is already from 2019. And in 2023, that's where they TOP. So in fact, this project for the last 2.5 years to 3 years, people has been staying in it, but yet in terms of transaction, they are doing at about $2,500 for a 3-bedroom on the 13th floor, $2,291 for a 2-bedroom just recently transacted, and of course a 4-bedroom on the 22nd story for $2,399 per square foot. So anything that we see in ELta, if we were to look into ELta itself, and I look at what's the available units for sale right now. So if I use this and I sort by pricing, I sort by type and pricing, and I look into their larger floor plate unit types, you will notice that today on the right, on the extreme right, there are the breakdown into per square foot. And the very interesting layout that I want to talk about is actually the 4 dual key and their 4-bedroom dual key. Their 4-bedroom dual key is 2,387 per square foot, and starting from 2,387 per square foot. So which means that today, if you are able to buy into ELta 2,387 per square foot versus the surrounding transacted units already done at $2,300, $2,400 per square foot, and within the development, there are units transacting at $2,600, $2,700. This is the gap that we are talking about. We want to be able to buy into this gap, buy into this protection, so that in future, at least I have that flexibility to sell at what the other people are selling, or I have the flexibility to sell slightly lower than what the rest of the people are selling and still make good profits for this property. So this is one illustration. And finally, if we want to talk about future land costs, so you are protected currently by the present, which is what ELta is selling for. We are protected by, of course, the resale prices in the region, and then subsequently the last and the most important thing is the future launch prices. Now, there is a launch at, or rather there's a plot of land all the way at Lakeside going for 1163 per square foot. I can bring up the numbers later on. So this Lakeside plot right next to MRT is going for 1163 per square foot per plot ratio, which means that today in terms of sales price, this will translate into $2,400 per square foot. Now, if you do a comparison for a new plot of land going for 2324 starting from per square foot in Lakeside versus something in Clementes where I can get in for $2,400, $2,500 per square foot, this is my future protection. So coming back to the drawing block, if I talk about buying into profitability, or rather buying the protection to ensure that today I can see profitability, there will be a few things that we talked about. Number one is the present prices. All right. So in this case, the present prices is well protected within the development itself. The next one that we talk about is the past prices, which is the resale within the area. So you are protected by the present within the development, we are protected by the past, which is the resale prices, and we are protected by the future, which is then the future land plots. So this itself will then determine that today, if this is that curve that we always talk about, the rainbow that we always draw, right? If today my resale price peg is already at $2,200 per square foot to $2,300 per square foot, versus today my future land plot coming in at on average $2,500 per square foot, or even higher up to $2,600 per square foot, me coming into this region at $2,300 to $2,400 per square foot, this is what we determine as safe entry price. And when I'm coming in at a safe protected entry price, what do I get out of this? I get the ability to then be flexible in my pricing in future. I get the ability to then sell in future, or I also get the ability to then rent out in future if I really want to for a new launch like that. So today, this is something that I use to determine based on my model for my clients, especially if they're buying for investment. These three things must be present that we are able to see, so that today we know that we are able to buy in at a much protected prices as compared to our peers and our neighbors. So if you like my content, please like, follow, and subscribe. And again, if you got any property matters that you wish to seek to consult, please contact me at 91999966. So thank you for today.